Frank Holmes, last time you were on the show, you mentioned that trade competitors like Russia and the U.S. are stockpiling gold as the U.S. dollar is no longer seen as trustworthy. So with Trump's tariffs on China taking effect since last week, will gold be even more in demand here?
I think in these other countries' currencies, absolutely. What they're paying on bonds, yields, money funds, whatever you want in these other countries, it's negative rates of return. So gold in U.S. dollar terms is sluggish. And that's just a fact. But we're seeing CPIs pick up, Daniela. I was with a housing contractor last night. He said steel has gone up 40% since Trump started this tariff war. And so you're going to see inflation start coming out in the next 6 months at an escalating rate. So then we'll see gold go through the rally in the U.S.
I asked that, Frank, because investors, I think, are just frustrated with a full trade war now being very much a reality. You know, gold is still under the 1,300 level. So you mentioned the U.S. dollar. Is it really just that story here?
Yes, and I'm surprised it's not lower in respect that these other countries' currencies yields are 5 and 10 basis points versus 250 basis points. So it's amazing to me that the U.S., which have such high relative interest rates, and the gold is actually doing so well on that relative basis. But what also is really important is that money is leaving the GLD, but it's not going into U.S. dollars like we've seen before. What we're witnessing now is going into gold stock ETFs. And there's a real strong thesis from Pierre Lasson's, the Ian Talpers, and the research we've been writing about for several years of peak gold. And there's no technology breakthroughs like there was for fracking, that there is for gold, for finding gold, to developing gold. So we're going to see these gold stocks becoming stellar performers, and that's usually a precursor to higher bullion prices.
So the money flowing into mining stocks, but not physical gold yet.
Yet in U.S. and Canadian and U.S. dollar terms, yes, it's shifting, but it's not panicking like jumping into cash. It's actually going and rotating into gold stocks.
In your opinion, is a recession on the horizon, as some analysts are predicting? And what should investors do to prepare for such a scenario if that's the case?
Well, always have your 10% weighting in gold and gold stocks at minimum. I think it's just a good way to be diversified. But I also think that when we look at sentiment numbers, the surprises were very negative for economic sentiment. And what would that mean in going to the second half? Well, rates could not rise further, but actually they could fall. And if the U.S. rates start to fall, then gold would quickly be $1,500. So I think if that is the real concern, gold will perform because they'll have to drop interest rates to stop a blown-out recession.
Frank Holmes, thank you so much for joining us today.
And happy investing, and have a wonderful time in Australia.
Thanks so much. We'll see you next week.